Welcome to Wait a Minute. This looks like something 99% of failing traders use. Much better. Hello, welcome to A1 Forex. My name is A1 Ingram. I am a professional Forex trader currently with the Poverty Evaluation Program. And what you can see out of this video will be just overall basically describing how to trade no-nonsense Forex. How to just start off with the things that you will need, the biggest tip I can give you, kind of explaining a little bit about it, and just little things like that. First, biggest tip, watch all of VP content, regardless if you're going to leave a comment, if you're going to join the Discord, if just anything. Do yourself a service and watch all of his videos. Please listen to all his podcasts and things like that. I promise you, you will not regret making that decision of watching all of his content. Next, let's just talk about the overall supplies that you would need to trade Forex. This not necessarily for no nonsense Forex, it's just Forex in general. What I prefer is that you get MT4 or MetaTrader 4, and for Windows, as you can see, you need Windows XP or better, dual core process with speeds of 2 GHz or higher, and a minimum of a 1024 by 768 resolution. And now for Macs, I currently use a Windows laptop, so I don't have any Mac experience, and while I was doing my research for this video, I couldn't find information showing this is the minimum specs that needed to run MT4 on Macs. But I'll drop a link in the description of Hugo's way, because they do have a link where you can download MT4. Now personally, I'm not affiliated with them. It's just a brokerage that I use to back test and things like that, to also forward test, and that it may or may not work for Macs. Excuse me. And also, I heard it's a lot of people that use TradingView or things like that to trade with. It's okay, but you're very severely limited in the number of indicators you can use and just possibilities. I would say just do yourself a service, go to MT4. And also with this, you need time and effort. This is not a system that you can build and just learn in one afternoon, or maybe even a week or a month. It's going to take real time and dedication, because you may spend 1 year building your first algorithm, but that one algorithm can last you for the rest of your life, and nobody can take that away from you. And also, one thing I also put on this list is a Discord account, and that Discord account is for the No Nonsense Forex Discord, and we'll get into that a little bit later on in the video. Next, Forex 101. I want to give a big disclaimer that the A1 Forex YouTube channel and the No Nonsense Forex YouTube channel is primarily Forex 201. We won't be, or maybe in the future, we might go over basic concepts like what is a pip, what is lots, and things like that, but that's not in the nearby future. If you want to learn the basics, go to my YouTube playlist that I have created for y'all, or go to Baby Pips and refer to the No Nonsense Forex podcast question and answer episode 2, and it's actually named "Where is the best place I can learn Forex?" and that is really good, and go through that first before you try to jump to No Nonsense Forex. And also, like I said, once you consume all the VP material, you'll go to the Discord and learn so much more information. Like I told y'all, or I haven't told y'all, but it's great indicators in there. Now guys, let me give y'all the preference. If you go to the Discord, do not go to the general chat and ask, hey, what are some really great Discords? A1 Ingram is not telling you to do that. I believe Jubilee and a couple of other users have put a little template out in one of the other channels of saying what you need to put in the search bar to find good indicators and things like that, because VP told us to go on all these websites and do all the things like that to find indicators. But if you go to the Discord, it's like a central hub for indicators, advice, like-minded people, and just overall, it's just a really great community, because I can say that I wouldn't be in the place that I am now without the Discord. So next, I've been keep referencing No Nonsense Forex, but I never actually talk about the way that we trade. So the way that we trade an algorithmic way, basically heavily technical analysis and things like that. And so first, what we're going to talk about is the greatest indicator on earth, the ATR. And what it is, it tells you the volatility of the market at that point in time. And now it may get skewed whenever it's a flash crash or things like that, major like news events move or things like that, but we'll get into that in another video. Next one is, like we said in the previous mention, the chalk it up video, your first confirmation indicator. And this is the foundation of your algorithm. Like I had told y'all, a good foundation can help you build a multi-million-dollar mansion or a regular house that end up cracking in a couple of years. Now with that, the next piece is the second confirmation indicator, and that serves the purpose to just filter out the bad trades of the first confirmation indicator. And that what it in other terms, it's made to get rid of all the losses that your C1 indicator had made. And the next one is a baseline. And now the baseline is a on-chart indicator that helps you filter out trades and gain more entries. So it helps filter out more of the losses that the first confirmation made, because in no nonsense Forex, we win by not losing, because we can take, say we have 3 trades. First trade we won 50 pips, second trade we lost 100 pips, third trade we made 50 pips. So would you rather get another trade that went 50 pips, so you get an overall net of 50 pips, or what you would do is maybe lose that second trade, eliminate that second trade, so now you're up 100 pips instead of just break even, or if you got an additional win. And that's just kind of the thinking process behind no nonsense Forex. And also, I believe, this is personally my touch, that the baseline is a on chart exit indicator, because it's kind of like in my previous video, like the SSL channel, that really isn't a baseline, but that's just an example of an on chart indicator. Or like my streams with the all average or the T-Coral multi time frame, those things like that, on chart indicators, is an exit indicator for the no nonsense Forex trading. And the next piece is the volume or volatility indicator. And what it is that it keeps us out of markets that is in consolidation, or other term, market condition where the price isn't really going anywhere. All we're doing is just bouncing up and down, giving us a whole bunch of losses. And the reason why they give us losses, because no nonsense Forex, we are trend traders. We do not trade scalping or swing trade or things like that. We are trend traders. So if there's no trend, we can't make money. So volume indicator gives us basically our life, what we breathe, our oxygen to our system. And the final piece is the exit indicator, and it basically does the name of it. It tells us when to exit trades. And now I'm pretty sure you're asking the question, okay, Chris, or okay, A1 Ingram, I got my algorithm, I got my MT4. What pairs do I actually trade? Well, the pair that you first start back testing on, you're not going to be trading for a minute. So the pairs that you actually start trading is Aussie CAD, Aussie NZD, Swiss JPY, Euro Pound, and Euro Dollar. And these 5 pairs are what VP had listed off as to be the benchmark, because it serves and it shows almost every market condition you will be able to face. And also, I don't think I put this in the video, but in my way of testing and the Discord way of testing, we serve on basically 3 years. So what you should do is start on January 1st, 2017 and end January 1st, 2020 for just a 3-year span of testing. So whenever you're back testing things like that, that's the umbrella that you need to be under. Alright, we're going to review the algo a little bit, kind of give a quick definition on like how we trade and things like that. So the actual algorithm piece, what you do is you either get a signal from your C1 or your baseline indicator telling you to go long or short. Excuse me. And all your other indicators have to agree, because it's an algorithm. Everything have to say yes, because you can treat it as, like, say, if you was a coder, if then statements. If the baseline say yes, then you move on to the next one. If your C2 say yes, move on to the next one, and things like that. And also, if it don't hit your take profit or stop loss levels, or you break even, or your trailing stops, you just exit whenever the price crosses your baseline, or your exit indicator tell you to do so. And also give you some further reference, we only trade 20 minutes a day because we trade the daily chart. We do not use the 4-hour, the weekly, the 1 hour, the minute chart, or none of that. We use the daily chart. And also, no nonsense Forex, we we heavily believe in bank manipulation. So the way to avoid that is to avoid major news events. And this is listed in the No Nonsense Forex news video, and that'll also be linked in the description below. Just watch that video and also watch VP's Big Bank videos. I know it's a long video and you probably don't want to watch it, but it'll be very beneficial for your knowledge and your psychological way of trading for you to watch that video. And also, guys, while we trade, we also refer to the dollar EVZ, and that also is kind of like a volume indicator because it kind of tells us the overall market conditions, if there's a lot of people trading in the market or just things like that. VP did a video where he went a little bit more in depth with it than I will. And this is a big question because this is a big FAQ for the Discord talking about risk exposure. So the overall concept is that you have a maximum of 4% risk per major currency. And what I mean by major currency is a singular currency itself. So they're talking about AUD, CAD, NZD, CHF, JPY, GDP, Euro USD, or not Euro USD, Euro or USD, or just one single currency. And with that going on, what VP always says is a 2% maximum per direction. So at maximum, you can only have 2% long or 2% short at any given time per currency pair, because that's our risk management profile. And so an example of this is, say if you have one risk on USD CAD long and 1% risk on GDP USD short, and net that is 2% long on the USD. Now some people most of y'all should know this, but for the people that don't understand why it's like that, is because whenever you go long, you are buying or you're hoping that the first currency pair grows stronger and that the second currency pair, the one that it crossed with, grows weaker. So in the first one, the 1% risk on the long trade, we're hoping that the USD gets stronger compared to the CAD. In our second trade, our GDP USD short, we're hoping that the pound gets weaker and that the dollar gets stronger. So whenever you short a trade, you're buying the second currency that's it being crossed with. And I hope that makes sense. If not, don't be afraid to leave a comment under the video or message me on Discord. So the algorithm building order, this is again a highly frequently asked question. So the way that I believe that you should build an algorithm is, the first way is for you to get your first confirmation indicator. That's regardless. You get your confirmation indicator and you should keep testing it, test for different settings, and just keep playing with it till you get something greater than 60%. Now don't limit yourself. If you see you still have more potential, keep shooting for higher, but before you move on to the next step, it should be around 60%. And then after that, you add on a second confirmation indicator, and that win rate should get you above 65%. And now those two are the same for each way of trading, but for everything that you see in green, that's when your mindset should transition from win rate to actual ROI and drawdown. And what that is, as you can see on the slide, return on investment, or drawdown, DD. And drawdown is I can explain that as what drawdown is. Say if you have a $10,000 account, you make a couple trades and you can boost that account to $10,500. And then say the next day you drop your account balance you drop your account balance down to $9,900. That would be a 6% drawdown. But let's just say that, so you went from, let me just try to explain. So you went from $9,900, you made a couple more trades, and now you up to $11,000. But then you lose from $11,000 to $10,000 and $10,300. Let's just put it like that. And so now the big question would be, what is my max drawdown? In that situation I gave you, your max drawdown is 7%. Because what you did was you went from 10,000 to 10,500. Then you went from 10,500 to 9,900. which was a 6% drawdown, but then you build your counter from 9,900 to 11,000, and then you drop from 11,000 to 10,300, which is a 7% drawdown. So even though you went lower initially, drawdown is calculated based off your highest peak versus your lowest peak intermediate. It's kind of hard to explain drawdown without an actual spreadsheet or just things like that. So I think talking about it in this video, I'll be making a video about that soon, about drawdown. And so anywho, back to the actual algorithm building. After you have your C2 indicator, you add your baseline. And whenever you add your baseline, talking about way one, after you add your baseline, you should be focusing on ROI and drawdown. And the way you do that is you actually start scaling out a trade. So you actually start entering the number of pips that you make in your results, calculating your money and things like that. And after you had a good place for ROI, then you add your volume indicator, which is kind of filter out all those losses and consolidation. And then after that, you add your exit indicator, and your exit indicator, as you can see on the screen, should increase ROI and lower drawdown. And now, depending on your preference, you can do it the first way, or you can do it the second way and initially add your exit indicator, then your baseline, then your volume. But I would say whenever you're building an algorithm, volume should be towards the end of you building it, and that your baseline and your exit really determine your ROI. And at the end of the day, win rate do not matter with algorithms, because there's numerous people who have around a 50% win rate or 40% win rate, but they have 40% ROI for 3 years or just something like that. And so with a great baseline and an exit indicator, it can take a system that should be quote unquote losing and make it to something great, because they let their winners win and cut their losses short. And guys, I know this is also a heavy question in No Nonsense Forex. What goals should I try to get? What benchmark should I get for my algorithm? What I believe for a 3-year period, what you should try to shoot for is 30% ROI and 12% drawdown. And I got those numbers based off my personal results and also the Discord's private Algo group admissions requirement, because they require 30% ROI and 12% drawdown. And I would say this is a high goal that you should try to get with just VP 5 pairs, because if you can get it on the 5 pairs, the sky is the limit after you scale out and do actual 28 pairs. And if you don't know, the 28 pairs is the 8 current major currencies crossed within each other. And so now that we went over all the concepts and things like that, in conclusion, I just want to leave y'all with a few thoughts that just let y'all know that wealth or long-term success do not come to those who put in the work. Now, there are many Forex YouTube channels out there that have many different ways of trading where you can get rich quick overnight, or maybe in a week you can grow an account from $1,000 to $10,000. A lot of times, hey, they have bad risk management, but you can't complain, because at the end of the day, they're making money and they're doing what they're doing to be successful. At the end of the day, as long as people are being smart and being successful in the market, I'm happy. But that's only for exceptional people. They're only for a certain amount of people. No Nonsense Forex is something that can almost virtually work for anybody, because it's a structured blueprint, but yet it's so much freedom, because you can have a fast algorithm where you're taking 3-5 trades a day, or you can have a slow algorithm where you're taking 2-3 trades a week. So it kind of all depends on whatever you want to do. And another thought is that trading, you spending maybe one good year trading our way, developing your algorithm, can establish a passive income for life. And with everything being said, RDP, relentless, discipline, and patience.